Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So, our next FOMC meeting is literally less than 24 hours away as of the time of recording this, and depending on whether the interest rates go up by 50 basis points or 75 basis points, I believe it will shape the markets for the rest of the year into whether we'll be breaking short-term bullish or whether we'll proceed breaking down to the downside. Now, if you do watch the channel, you do know that I'm not one of these YouTubers that says, oh, if we break this level, then we go up, and if we break this level, then we go down. And then obviously one of those things is going to happen, and I'll be like, exactly as predicted. I'm going to give you the scenario which I think is most plausible to play out. But with that being said, the interest rates tomorrow is very, very 50-50. So I do want to prep you on the off chance that we do get a 50 basis point increase, in which I do believe the markets will pump in the short term from. So let's start off with the scenario that I'm currently backing at this moment in time, and that will be the Fed raising interest rates by 75 basis points tomorrow. How will this affect the market? Well, this is the bearish situation. This is the case for the bears that I wanted to talk about at this moment in time. You can see this would be a beautiful, perfect setup across the entire board for all of the markets. I mean, right now, the S&P 500, I do want to make this a Bitcoin video, so I'm really not going to talk about this too much, but the S&P 500 is literally sitting above, or sitting just beneath this mean trend line that we've been rejected from. We tried to poke our head above it on the futures today and got broke back down to the downside. The daily for the stock market is really not looking good. So I really do think this bearish situation is very plausible. As you can see, if we do look at the total cryptocurrency market cap right now, we literally broke down to the last Fibonacci in the sand from the lows to the highs, and that is your 786 Fibonacci right here. You can see we broke down, boom, and it looks like we are forming a bear flag at this moment in time. So for the total cryptocurrency market cap, we're also sitting just beneath the range lows. I mean, if I pull out a box from the candle body closes right here down to this wick down here, you can currently see, you know, today, this week, that we poked our head into this area that was previous support, and if we've just broken back beneath this, and today we've come up and retested this as resistance, tomorrow if we get that 75 basis point increase, it's going to be curtains for the total cryptocurrency market cap, it's going to be curtains for altcoins, and you can also see a very similar situation if we're looking at the Bitcoin chart. Now, as you do know, not a big fan of trend lines. I am a big fan of Fibonacci's, though. I do notice Bitcoin is thoroughly respecting them at this moment in time. From the lows to the highs up here, what did we do? We kind of stayed range bound within this golden pocket for a while, broke down to the downside. We hit one of my first macro price targets that I mentioned a while ago on my channel, the 1.236 Fibonacci, 15,750. We broke down, touched this point exactly, and where are we pumping back up to at this moment in time? Well, you can see if I draw this support box encompassing the range lows at 17,600, encompassing this touch point and encompassing this touch point, where do we come up to today, touch, and then start to break down to the downside? Well, we came right into this box. On the daily time frame as well, you can see we've reverted back to the top of the long-term moving average in the daily EMA ribbons. Now, the weekly EMA ribbons are a little bit further away. We're actually going to talk about the weekly EMA ribbons when we're talking about the bullish scenario. But once again, total cryptocurrency market cap sitting at the range lows from back in June. And the same with Bitcoin. So if, as you can see on Bitcoin as well, it does look very much like we are in another bear flag at this moment in time. And, you know, if you've been watching the channel for a while, we've been letting you know, the time to be bullish is not when you're in a bear flag. We would need to see a big break above this. At this moment in time, we are in a very, very nasty pattern. And even if I do draw like a micro Fibonacci from the top of this range down to the lows, you know, we've only pumped up to the 382. We're at 17,800, and people are acting like we're in a new bull market. But you know, 17,600 was the lows, like the absolute lows, like a couple of months ago. And now we're back at this price target, and we're celebrating like we're in a bull market, which is very ridiculous to me. Once again, we're in a bearish pattern. We're beneath the range lows. Nothing has changed in the higher time frames. Now, when we come over and check the oscillators on the daily time frame, bear in mind, weekly time frame will be a different situation we're going to be talking about for the bullish case, but let's start off on the daily time frame. You can see at this moment in time, the squeeze momentum indicator is already in green territory. So I do find it hard to believe that the squeeze momentum indicator is going to be able to push back up too much further, especially as we are beneath the range lows. I mean, on the daily time frame, we're very overextended. On the weekly time frame, it's a slightly different picture. However, to see that continuation, to see this breakout from, the tops that we're currently getting stuck at on the oscillators on the daily time frame, we would absolutely need to see that 50 basis point increase, or less than 50 basis points, which I don't personally think will happen. 50 basis points is very 50-50 to me right now. I'm on the fence whether we're going to get 50 basis points or 75, which is why I'm presenting you both opinions ahead of the market. Obviously, like I said, I'm sticking with my guns on the bearish bias for this one. I can't get bullish when we're at range lows and in a bear flag right now. And on the daily time frame, squeeze momentum indicator is pretty overextended compared to how it's been in previous uptrends. You can see the MFI as well since March. Boom, touch point, boom, touch point. Didn't quite run up to it here. Came up and double top from here. So you can see very nice double top structure on this MFI indicator over here. And even on the daily, it looks like we're once again approaching, potentially making another mini double top or something like a triple double top on the daily time frame for the MFI to start heading down to the downside. And also, stock market liquidity conditions are also extremely overextended, just like Bitcoin with the money flow index. If you do watch my channel, you might have watched this video, Bitcoin liquidity crisis, where we've already talked about how liquidity conditions are doing in the stock market. I won't talk about it for this video, but for Bitcoin specifically, lower time frames, the money flow index is quite topped out right now. And same with the stochastic RSI, we're extremely topped out. We're currently sitting around about 95, which is once again another reason why I can't be bullish in the lower time frames for Bitcoin, especially if we do not have a 50 basis point increase or anything less. Now, coming over to another chart for Bitcoin, the final chart that I would like to talk about for the bearish situation, well, the final chart that doesn't have anything to do with on-chain metrics, and that is the fact that if you draw your Fibonacci's from your lows down here in 2018, and you also draw your lows from down here in March of 2020, you can see, we bounced on the 618 Fibonacci, lost it, came down to the 786 Fibonacci. We spent ages, absolutely ages, holding the 786 Fibonacci floor. Then we formed something very reminiscent of a head and shoulders pattern. We broke to the downside of it, and once again we talked about the bear flag just a second ago, so I won't redraw it, but you can see we've broken down and we're pushing back up. We're in a bearish pattern. We're beneath the range lows. Daily oscillators are topped out, and we're beneath both of these 786 Fibonacci boxes. And if we do look at the daily time frame, you can definitely see why Bitcoin is currently struggling to get above this 786 Fibonacci box. Now, that's pretty much all I wanted to talk about for Bitcoin in the bearish scenario. I don't think there's going to be any value that I can provide by looking at like the 4-hour time frame and the daily time frame too much for you, because like I said, TA is really not going to be what's ruling the market. It's going to be the interest rate decision that's going to happen in the next 24 hours. Now, one on-chain metric that I would like to quickly talk about, because there's not enough on-chain metric updates to make a whole video about this, but the smart money. If you watch the channel, you know all about this. I won't explain it too much, but they're still on the sidelines and they're still selling, and that should be enough said. I mean, when we look at how they've performed in these markets, they sold at 46,500. They've been on the sidelines ever since, and they're starting to sell. As you can see, there's been a big drop since Bitcoin was around about 17,000 or so. 16,600 or so, and as it's been pumping to 17,000, 17,100, 17,200, they're slowly starting to sell a tiny bit more, which definitely makes me believe maybe the smart money knows something we don't about the Fed interest rate decision tomorrow. But that is the bearish case. Like I said, I will be presenting you the bullish case as well. As you know, I'm not the big fan of playing both sides. I will pick one scenario that I do believe in, and that is of course going to be the bearish scenario that we just talked about. Now, let's say hypothetically that the Fed raises interest rates by 50 basis points tomorrow. This is not bullish in the higher time frames. If you want to know, or you don't believe me that that's not bullish in the higher time frames, then come over and check out my channel and click on this video, what a Fed pivot really means. And we've looked at the interest rates and looked at what they historically mean, what Fed pivots actually mean for the S&P 500 and other equity markets. And a Fed pivot isn't what you think. It takes a long time to come from restrictive monetary conditions to accommodative monetary conditions, and a 50 basis point increase is just restricting market conditions even further. So if we do get a 50 basis point increase, I do believe that we will have a short-lived scam pump. And where is the absolute top that I see this scam pump coming up to? Once again, hypothetically, if we do get that 50 basis point increase, what could happen? Well, I do believe the equity markets would rally. If we look at the S&P 500, I definitely think it's probable that we'll pop our head above this trend line, maybe push up to around about, 4,200 or so before making a lower high from this region over here. This could be a monumental liquidity grab, which could present itself with some very nice options for us, the Cowboy family, to short. As all the bulls are getting bearish, we will be getting ready for that next short as we do push up to the EMA ribbons, which is, why I've been saying, if you do watch the channel, I have been saying, for Bitcoin, we're not in a position of strength right now. I am in a trade for Cadena. That trade is still in the profit. My stop loss is going to be stopped out in the profit, worst case scenario. So once again, we very carefully pick and choose the trades that we run on this channel. And at this moment in time, Bitcoin is still not in that position of strength that I would like to see it at before the next short. But let's say 50 basis point increase tomorrow, what could happen? Well, we could definitely see a liquidity grab. If I do look over here, you might be looking at this green box and thinking, hey, this is drawn to candle body closes, wicks, candle body closes, wick, candle body closes, candle body closes, wick, candle body close, wick, and candle body close, wick, and then we fell beneath it. But what this is actually in correlation to is the VPVR volume cluster. This is where the most amount of data was traded since we made those 17,600 quote-unquote range lows where the quote-unquote bear market bottom was in. But obviously we know that's not the case. We broke beneath that. But it is definitely possible we could push back up to this liquidity range, grab liquidity between the ranges of 19,250. That would be a sizable increase, potentially a slight rejection from the VPVR zone before we push up and find ourselves getting whacked against the EMA ribbons at 20,000 on the dot. Do I think this is going to be the most likely scenario? No. If this does happen, will I be shorting? Yes. Now, this position could mean that Bitcoin could push up about 11.5, maybe even 12% coming into that end of year rally. And if that does happen, like I said, this is going to present ourselves with a great opportunity to short from a position of strength. I never short unless we're in a position of strength. I am very, very careful with where I put my money, especially when I've got, 8,300 people watching my channel. This is why the only trade that I'm in right now is the Cadena trade. This was a great trade. We entered this trade at $1.12, and as you can see from our entry, even though the markets have pumped a little bit, we are still sitting very, very peachy in this. My stop loss is round about 109, which would mean we would get stopped out on 3x leverage in 12% profit. But right now this trade is still in about 27% profit, so definitely nothing to worry about in this trade. But for Bitcoin, Bitcoin's in a different situation. We're still not in a position of strength. We would need to see a reversion up to 19,000 / $20,000. Until that happens, I wouldn't be considering another Bitcoin short. However, tomorrow, if we do get a 75 basis point increase, there might be a nice opportunity to short in the lower time frames from a position of strength on the daily time frame. But once again, we need more confluence with the economic data that's coming in. So this would be the bullish scenario, pushing up to the range lows. Once again, candle body closes 20,000 before running back down to the downside. If we do also look at the oscillators on the weekly time frame, I mean, there's even an argument to be made that the bullish case is already fully completed, because if we're looking at the weekly time frame, sure, some of these oscillators are beat down quite a lot, but the MFI is still in a very nice downtrend, and we only just touched the MFI overextension round about $21,500, about two or 3 months ago. Yeah, basically 2 months ago. So like I said, I mean, even if we do have that 50 basis point increase, I find it very hard to believe that any of these momentum indicators are going to be able to push up very, very far. MFI is already quite overextended. Squeeze momentum indicator can move up very, very, very fast, but once again, this could definitely push all the way up to 20,000 before that next top over on the weekly time frame. And this would be another signal that I would love to see if we were getting ready for that next reversion to the mean, that next liquidity grab that we could obviously short from. And over on the squeeze momentum indicator, you can see we're basically at the heart line. So it's kind of hard to find indicators right now. It's kind of hard to find analysis that's even bullish. The squeeze momentum indicators right now is very, very neutral, as we are kind of returning back to this heart line, but this could work in both ways. We're currently sitting in a global liquidity crisis, and as we're at the heart line, I would say that this is probably more of a neutral, more leaning over towards the side of a bearish indicator, because there's so much room for us to move to the downside, and in my opinion, not too much room to move to the upside. Coming over to our final chart, which once again is fairly neutral, but could definitely lend credence to a slight push up in the upside. Now you can see there is a volume cluster round about 19,000. When does this volume cluster start topping out? 20,700. Do I think we'll top out at Do I think we'll push up to 20,700? No, but you know, if we're entering trades from 20,000, we won't get wiped out if we do push up to that level. So, you know, even in this bullish scenario that I'm talking about, you know, a 10, 11, 12, 13% pump is really all I see us getting before I see us start breaking back down to the downside and rocketing to new lows. Now, if you do watch the channel, none of my price targets have changed. Let me come over to Bitcoin here. And, you know, what I highlighted in my previous video is that once we do complete this liquidity grab, once we do grab liquidity from here, that next bearish news event, just like in this news, just like in this meme over here, another traumatizing event. This could be, you know, your 75 basis point increase, and with this, we could finally rocket down to 14,000. Why 14,000? Let's zoom out. You can see touch points all over this range, rejection, and you know, from where we're sitting right now, when we did poke our head above 14,000, we just took a straight run to the upside. So this is really the only and next area of open interest I've got in Bitcoin, and where I do think that we are going to be heading back down to in the higher time frames. Now, regardless of tomorrow whether we get a 50 basis point or a 75 basis point increase, my bearish stance absolutely hasn't changed. If we get a 50 basis point increase, like I said, I see us having a short end of year scam pump before breaking back down into new lows. If we get a 75 basis point increase, I see us immediately pretty much rocketing down into new lows and probably hitting new lows by Q1 2023. So either way, even in the bullish scenario, I see us breaking down into new lows in Q1 2023. In the bearish scenario, I just see us breaking down almost immediately tomorrow and starting to rocket down to the downside. So that's all I've got. Like I said, I'm not a fan of playing both sides on this channel, but I did want to let you know there is a possibility that if we do have this 50 basis point increase tomorrow, we could have a little scam pump. So like I said, I'm letting you know which one I find more plausible. I think it's more likely we have the bearish scenario, but I'll keep you up to date. If you do want to be informed when the interest rates come out, be sure to head over to my Twitter at 618_cowboy. I will be posting the results of the FOMC meeting. For today, my friends, that is all I've got. As always, if you do enjoy the content, make sure to let me know down below by hitting that like button, leave a comment, and share the videos with your friends. It's been your boy Cowboy Trades. I'm out.